Ever wonder how you really get a handle on a company's health and maybe where it's heading?
Yeah, looking under the hood at their financials is, well, it's a really powerful way to do it.
Absolutely. So today we're zeroing in on Archean Chemical Industries Ltd. We're looking at their recent Q4 and full year results for FY25. They just came out May 2nd, 2025.
Exactly. And we've, sifted through the key documents, the audited results, both standalone and consolidated.
Right.
Plus the auditor reports, the declaration saying everything's okay, the whole lot.
So the goal for this deep dive.
Well, it's to pull out the really crucial bits, give you a clear picture of what's happening with Archean Chemical.
Without getting totally bogged down in spreadsheets and data points.
Precisely. Think of it as your shortcut to getting up to speed on their performance.
Okay, let's dive right in then. The numbers. Revenue first. How much money actually came in?
All right, so for the quarter ending March 31st, 2025, their standalone revenue, just the main company, was 33,338.38 lakhs. And the consolidated figure, that includes the subsidiaries, was 35,338.35 lakhs.
And for the full year, also ending March 31st.
Yeah, for the full year, those numbers jump up significantly. Standalone was 137,902.48 lakhs.
Wow.
And consolidated hit 141,379.02 lakhs.
Big numbers. But, I mean, how do they stack up? We need context, right?
Yeah.
How does this compare to, say, last year?
Right. Context is key. And what's really interesting here is the year-over-year growth. It's quite clear.
Okay.
So if you compare this last quarter, Q4 FY25, to the same quarter last year, Q4 FY24, well, there's a substantial jump.
How substantial?
Standalone revenue went from about 25,488 lakhs up to that 33,338 lakhs figure.
That's a decent increase.
It is. And consolidated did even better relatively, going from roughly 26,396 lakhs to 35,338 lakhs.
And the full year picture shows the same kind of growth.
Yep, similar story for the full year. Standalone grew from about 106,344 lakhs in FY24 to nearly 137,903 lakhs in FY25. And consolidated expanded nicely too, from around 112,958 lakhs to that 141,379 lakhs mark. It shows a real expansion in their earning power.
That year-on-year growth definitely catches the eye, no doubt about that. Now, what about more recently, quarter-on-quarter, Q4 versus Q3 of this past year?
Good question. Need to see if that momentum carried through, right?
Exactly. Is it accelerating, steady, slowing down?
Looking at those numbers, Q3 FY25 to Q4 FY25, we do see a further increase. It's maybe more modest, though.
Okay, modest out.
Standalone revenue just sort of edged up from about 32,177 lakhs to 33,338 lakhs. And consolidated rose from around 34,253 lakhs to 35,338 lakhs.
So still growing quarter-on-quarter, but maybe not at the same pace as the year-on-year jump.
That's a fair way to put it. The big story is definitely the strong year-over-year growth, but the quarter-on-quarter suggests more of a, let's say, steady climb recently.
All right, revenue's looking strong overall. Let's pivot to, well, the crucial profitability. How much of that cash actually turned into profit?
Yes, the bottom line. Let's look at profit before tax first, PBT.
Okay.
For Q4 FY25, ending March 31st, standalone PBT was 7,958.23 lakhs.
And consolidated?
Consolidated was 7,467.51 lakhs for the quarter.
And the full year FY25 PBT figures?
For the whole year, standalone PBT hit 24,976.68 lakhs, and consolidated reached 22,214.49 lakhs.
Now again, the comparison. How does this PBT performance look against the previous year, FY25?
Okay, this is where, as you said earlier, things get a bit more nuanced.
Nuanced how?
Well, let's take Q4 first. In Q4 of FY24, standalone PBT was 7,548.35 lakhs.
So Q4 standalone PBT is actually up slightly year-on-year, from 7,548 to 729.41 lakhs.
So the consolidated Q4 PBT actually dropped year-on-year, from 8,229 down to 7,467.
Correct, and it gets even more interesting when you look at the full year.
Okay.
For the full year, FY24 standalone PBT was 28,984.95 lakhs.
Higher than this year's 24,976.
Right, and consolidated PBT in FY24 was 26,718.41 lakhs. Also higher than this year's 22,214.
Exactly. So despite that strong revenue growth we talked about, the full-year profit before tax is actually lower than the previous year, both standalone and consolidated.
That definitely points to something happening with costs, doesn't it? Margins getting squeezed.
It certainly suggests that. The divergence between strong revenue growth and weaker PBT implies challenges, maybe with their cost structure or pricing power.
Okay, so that's profit before tax. What about the net profit after tax, the real bottom line for shareholders?
Right. Pay profit after tax. For Q4 FY25, standalone PT was 5,830.74 lakhs.
And consolidated PT for Q4?
That came in at 5,374.54 lakhs.
Okay. Full year FY25 PT.
Standalone for the year was 18,492.34 lakhs, and consolidated was 16,214.49 lakhs.
And let me guess, comparing this to FY24 shows a similar trend to the PBT.
You got it. Let's compare Q4 first. Q4 FY24 standalone PT was 5,628.69 lakhs.
So like PBT, the standalone Q4 PT is up slightly year on year, 5,658.60 lakhs. Again, higher than this year's Q4 consolidated PP of 503.7 at C4, so a drop there too.
Yes, and the full year follows suit. FY24 standalone PAT was 22,334.56 lakhs.
Much higher than this year's 18,492.
And FY24 consolidated PT was 19,821.1 lakhs.
Also higher than this year's 16,214.
So yeah, the trend holds. Slight increase in standalone Q4 net profit, but a decrease in consolidated Q4 net profit year on year. And for the full year, net profit is down for both standalone and consolidated results.
Okay, so to summarize that bit, revenue way up year on year, still climbing quarter on quarter, but profitability, it hasn't kept pace. It's actually lower for the full year compared to last year.
That's the core story on the profit side. It strongly reinforces that idea about pressures on margins, likely from increased expenses or cost of goods sold.
Did the report give any direct clues about which expenses might be driving this?
This initial release doesn't go into super fine detail on the why, but it does give us the overall expense figures.
Okay, what are they?
For the full year, FY25 total standalone expenses were 112,925.80 lakhs.
Right.
And consolidated expenses hit 119,164.53 lakhs.
And they break that down at all?
They mentioned a couple of key components. Cost of materials consumed for FY25 was 66,344.54 lakhs standalone and 67,238.69 lakhs consolidated.
So materials are a huge chunk, over half the standalone revenue, roughly.
Definitely a major cost driver. And the other one they highlighted was employee benefits expense.
How much was that?
For FY25, it was 7,305.74 lakhs standalone and 7,252.78 lakhs consolidated.
Okay, so while we don't know the exact change in those from this report alone, they are clearly the big levers on the expense side. Any squeeze there would impact profit.
Precisely. A deeper dive into the full annual report, when available, would likely shed more light on the trends within those specific cost categories.
Got it. Okay, let's switch gears slightly. Shareholders always want to know about dividends. What did the board decide?
Good news on that front, potentially. The board has recommended a final dividend.
Okay.
It's REG, 1.56 per equity share. The face value of each share is RS2, so that works out to a 75% dividend payout based on face value.
For the year ending March 31st, 2025.
Yes, for FY25. But it's important to note, this is a recommendation.
Right, needs shareholder approval.
Exactly. It's subject to approval at the upcoming annual general meeting, the AGM.
And when is that?
It's scheduled for Monday, June 2nd, 2025. And like many these days, it'll be held online via video conferencing.
Okay. Anything else significant from the board meeting? Any other appointments or major decisions announced?
Yes. One other key item was about the auditors. Not the financial auditors, but the secretarial auditors.
Okay, what about them?
They've appointed a new firm, Mrs. HVS & Associates, for a 5-year term.
Starting when?
Starting from this current financial year, FY 2025-26.
And that also needs shareholder approval at the AGM.
Yes, that's also subject to member approval. And they mentioned more details on this appointment will follow separately, as per the SEBI regulations, the market regulator guidelines.
Right, the LODR guidelines. Okay. Now, speaking of auditors, let's circle back to the financial audit itself. What was the outcome there?
This is pretty important. The statutory auditors, the ones who check the main financial results,
Yeah.
they issued their reports on both the standalone and consolidated results for the year ended March 31st, 2025. And they came back with unmodified opinions.
Which is good news, right? Means they didn't find major issues.
Exactly. Think of it as a clean bill of health for the financials. It basically means the auditors are saying the reports present a true and fair view without any significant qualifications or red flags.
Okay.
And the chief financial officer, the CFO, also issued a formal declaration confirming these unmodified opinions.
So that provides a good level of assurance for anyone looking at these numbers. The figures might show mixed profitability trends, but we can be reasonably confident they're accurately reported.
That's the takeaway, yes. Reliability and accuracy are key, and the unmodified opinion supports that.
Great. Now, beyond just the numbers, the announcement also touched on Archean's business itself and some, well, interesting strategic moves.
Yes, it did. It reiterated their core business, of course.
Which is
Primarily manufacturing marine chemicals. That's their bread and butter.
okay. And they have subsidiaries.
They do. They listed Archean Chemical Industries Private Limited, Archean Chemicals Private Limited, and Idealism Kinsey Private Limited. Standard stuff.
But you mentioned strategic moves, something newer.
Yeah, this is where it gets quite interesting. They highlighted recent steps to diversify into some, let's say, high-growth technology areas.
Oh, ooh, okay. Tell me more. What are these ventures?
Well, first, they've incorporated a brand new subsidiary. It's called Classic Wafer Fab Limited.
Classic. SiC, like silicon carbide.
Exactly. That's the focus. Manufacturing silicon carbide, specifically 6 MOSFETs and devices.
Wow, okay. That's semiconductor territory. Big shift from marine chemicals.
It really is. 6 is a key material, especially for things like electric vehicles, renewable energy systems, high power, high efficiency applications.
So they're leveraging their chemical expertise to jump into the semiconductor supply chain.
That seems to be the strategy. Using their core competency in specialty chemicals as a launchpad into this rapidly expanding market.
And they're putting money behind it.
Yes, the announcement mentioned they've made a financial investment into this new venture, shows commitment.
Very interesting. That's one major strategic move. What was the other one?
The second one is an investment they've made in a company called Off-Grid Energy Labs.
Off-Grid Energy Labs. What do they do?
We're working on zinc bromide battery technology.
Battery tech. Okay, another hot area.
Definitely.
Hmm.
This technology has potential applications in energy storage, think grid storage, maybe home storage, and also low-power mobility solutions.
So this aligns with all the buzz around renewable energy and the need for better batteries.
Precisely. It fits right into those major global trends. Efficient, cost-effective energy storage is, a massive challenge and opportunity.
So Archean isn't just sticking to its knitting with marine chemicals. They're actively placing bets on semiconductors via CC and on advanced batteries with this zinc bromide tech.
That's what these moves suggest. They're looking beyond their traditional core and positioning themselves in these future-focused sectors.
Okay, let's try and wrap this up then. We've covered a lot of ground: revenue, profit, dividends, audits, strategy. What are the main takeaways you see from Archean's Q4 and FY25 results in these announcements?
Okay, summarizing. First, strong year-over-year revenue growth. That's clear.
What?
But profitability hasn't kept pace.
Mhm.
Both PBT and PAT were down for the full year compared to FY24, despite the higher revenue. That's a key point to watch.
Right. Margins are under pressure. What else?
The dividend recommendation is a positive signal for shareholders, assuming it gets approved.
And the audits.
Critically, the clean audit opinions provide confidence in the reported numbers. That's reassuring.
And strategically.
Looking forward, those moves into silicon carbide wafer manufacturing and the investment in zinc bromide battery technology, they're really significant.
Yeah, they represent major diversification efforts.
Definitely. Potential to tap into very large, very fast-growing markets.
Yeah.
But also, requires investment and carries risk.
So these strategic shifts really paint a picture of a company with, well, an ambitious vision for its future beyond just chemicals.
Exactly. It looks like Archean is aiming to leverage that chemical know-how to really participate in the wider technology landscape.
Which raises some interesting questions for the long term, doesn't it?
It does. Like, how will they balance investment and focus between their established cash-generating chemical business and these new, potentially capital-intensive tech ventures?
Yeah, that's a classic challenge. Okay, so maybe a final thought for you, the listener, as you process all this from Archean Chemical.
Consider this. What are the potential long-term synergies here? Can their chemical expertise really give them an edge in semiconductors and batteries?
Or are these just separate bets? And also, what are the risks? Balancing growth in the core business versus the demands of these ambitious new ventures. It's not easy.
Definitely gives you plenty to think about regarding Archean's path forward.